session. And everybody knows you. Fund America is one of the good companies that started earlier in the crowdfunding space, and they do the back end for as far as a broker dealer, escrow, and everything, the technology background.
Yeah, this is about what you need under the hood to conduct your offering. If you think about in the public markets, if you buy 100, if you log on to your Merrill Lynch account and buy 100 shares of stock, and someone else logs on to E-Trade and sells 100 shares of stock, how do the money and the shares get from one place to the other? And to the investor, it's just magic, but of course there's structurally under the hood, there's all these entities that are DTC, NSCC, clearing firms, transfer agents that make this possible. In the private securities space, we don't have this infrastructure, and that's what my company, Fund America, builds. Our customers are broker dealers, clearing firms, and investment advisors and people like that. We're under the hood. Now, that's the secondary side. The primary markets, and what we're talking about are Reg A. How do you conduct a Reg A offering so that you can go out to the crowd, get the money to the company, to the business, and then get up on OTC and start trading? So we're going to talk about the components of a successful Reg A offering, the structural and regulatory aspects of how that happens. So before you do anything, before you start selling securities, there are some things you have to do to get ready, to make your Reg A ready. You've got to do your legal. You've got to have your law firm, your lawyer has to put together the the 1A. Your accounting firm, as you just saw, has to do the audit. You have a lot of blocking and tackling. So you've already done that. And you have to do a lot of marketing. Your broker dealer or your funding portal is not going to sell your offering for you. That's a fact. And we see most of my company services, the vast majority of Reg A's as well as crowdfunding deals in the market. So we see almost all the successes, we also see almost all the failures. And hands down, the failures are from people that don't have their marketing in shape and understand that they are going to have to do their own marketing. The broker dealers and the portal platforms are not going to just sell the deal for them. So let's say you're done. You've got Darren with CrowdFundX, or you've got your marketing team. Everybody is ready to go. So you're done with that. Your SEC filing. It can take a while. The SEC, you got to file the documents. You're going to ask questions. You have to respond to the questions. And as Blaine just brought up to me, if you have a broker dealer involved, you also have to have a FINRA 5110 filing. All this stuff takes time, but you're now done that. So your legal and accounting is done, your marketing is ready, your SEC filing and possibly your FINRA filing, you're done, you're qualified. Now what? How do you go from this stuff's done, yay, we're ready to launch? We've had issuers call us going, we have our SEC qualification, we want to start selling securities. How do we do that? It's like, well, it would have been good to think about this before you went through everything. It should have been part of your planning process. So we're going to talk about that. First, crowd direct offerings means investing in the internet. People will use the internet to invest in your business. Not might use, will use. The internet is how it's going to be done. So it requires a number of tools and automation in order to pull this off. First and foremost is, once you're ready to go, you've got to have an online transaction engine. When somebody comes to your website and sees your securities offering, or your portal's website, or your broker-dealer's website, wherever the offering is located, there's going to be a transaction engine. There's going to be a button that says Invest Now, along with all your disclosures and your marketing materials, your cool video. All that stuff is on this page to engage the investor, and they're ready to say, yeah, I'm in. I want to click a button and invest in this deal. There are some key elements about what that transaction engine should have. It's got to be a single event and frictionless process. And what I mean by that is the investor goes soup to nuts in one sitting and invests in your offering. You do not stop them, you do not pause them. You do not tell them to go away and wait for documents to come, or to go away and wait for access to a deal room to see documents, or to go away and sign up for an account. You never stop them from investing. Everybody in here that has a business, sales are at the core of what everyone does, what we all do. When an investor is willing to give you the money, take their money. If you stop them and require them to do something else before they can invest, you will lose between 60 and 90% of your interested persons, because investors have shiny object syndrome. They walk away, they're going to do something else. So it's got to be a single event and frictionless. They're going to put in their vesting information, they're going to make their accreditation statement, they're going to electronically sign a subscription agreement, they're going to move their money into escrow, generally by ACH, and they're going to be done. It should also do a number of things that you can solve with technology. For instance, non-accredited investors are limited to the greater of 10% of their income or net worth, which is a self-stated number. So your transaction engine should let them self-state that number, and if they have violated how much they're investing, they make $100,000 a year and they're investing $50,000 in your offering and they're not accredited, that doesn't work. So the technology should stop the transaction right there. Otherwise, you're just going to have back office problems. So it should correct the investor. Automated email confirmations should be going out from the system. Hey, thanks for investing in our deal. Hey, we received your money. Yay. Hey, we've met our minimum and we're breaking escrow. So you've got exceptions. We saw this with the Elio offering. We see it with Reg A's all the time, where an investor comes in and says, I'm investing $25,000 in this offering, and suddenly we get a $50,000 wire into escrow. Well, what happened? Well, they changed their mind. They wanted to invest more. Okay, great, but that's an exception. They have to re-sign a new agreement to do that. Or signer not present. You've got a lot of broker-dealer investment advisors that are investing on behalf of people, but those people still have to sign the forms. So you want to make it very easy and electronic for them. You've got, in Reg A, you're going up on OTC, you have some investors that are really passionate about your company. They want to hold the securities directly in their name. It's called DRS. Great, let them. You have other investors who want to get the securities into their Schwab account, their Merrill Lynch account, their E-Trade account, or whatever, because they're going to trade. They want them carried on statement. Great, let them. You want to make this easy for people, whichever way they want to go. And the same thing if a broker-dealer is involved. The last point on this is KYC and FINRA Rule 2111, which means the broker-dealer is responsible to know if the securities are suitable for an investor. You have to bake that into the online transaction engine. If it's a direct deal and you're not using a broker-dealer, because you don't have to use a broker-dealer, then you don't need to put that in your transaction engine. So these are all variables that you have to account for and you have to think about ahead of time, so that the day you go live and an investor comes to wherever you've got the offering listed on the internet and says, yes, I want to invest, it's ready to go, so that you can do this in one fell swoop and make it very, very easy on people. You've got escrow. A lot of people say, well, gee, I don't want to use escrow. I want to just the money come directly to me. That's a really terrible idea. First of all, generally it's not legal. Second of all, escrow is used to protect both the investors and the company. What it allows you to do is, when you've got the transaction engine, so you're going to take the investor's money when they're ready to send it, but it gives it a bucket or a parking place to then clear the investor. I mean, maybe the person that just invested is really trying to launder money. Maybe they're on a bad actor list. Maybe the tax ID that they used in investing in your company belongs to a deceased person and it's in the IRS list. You have to know these things and then reject those investors before you sell them securities, which you're permitted to do. And the reason it protects investors is because escrow is going to make sure that the bad actor checks are done so that the issuer does not run afoul of SEC regulations. They're going to make sure that you don't get funds as the issuer until you've raised the minimum. If you have $1 million, $5 million, whatever the minimum is on your offering, you don't get cash until you meet that minimum. And it's escrow's responsibility to ensure that. Now that is a cool thing about Reg A. If you're trying to raise, let's just say $50 million, whatever the number is. Elio raised $17 million. They had a stated amount they're raising $25 million. In a typical IPO, you don't get any cash until the closing date, which could be at some point in the future. A Reg A is a different beast. A Reg A is actually a unrestricted private security. And what that means is it's often a min-max. What that means is, in the case of Elio, the first weekend they launched, we got several $1 million into escrow because they had that rush of people that they had teed up, ready to go. Then over the next 2 months, they raised an additional $15 million. They didn't have to wait until the final close date, months away from the original offering, before they started receiving cash. They started getting cash out of escrow almost immediately. So what that means is they were able to fund the business, pay salaries, buy parts, grow the company, even though the offering was still going on. And that is one of the best features of Reg A. It gives you the ability to do that. So you're not going to trade on OTC until the final close, which is at some point in the future, but you're going to get money out of escrow now and tomorrow. XTI, they're still alive. They're still going. They take weekly drawdowns. Realty Mogul has their Reg A live. They draw all the time. So you've got all of these different companies with Reg A's that are getting money out of escrow. They don't have to wait. And the other thing that's key about escrow, and why I say e-escrow, is you want to log on and see how much money is sitting in escrow, what investors have invested, how they were going to send the money into escrow via ACH, via wire, via check. We're doing the BrewDog offering. They have a lot of UK investors, so we allow UK investors to invest via BACS, which is a like ACH-like system over in the UK. So, but you want to see how the money's supposed to come in. If it's in, if it's not, you want to know that, so maybe you're going to call them. If it is, you want to know the status of it. For instance, if they send a check in, it's going to have a check hold. The bank's going to put a hold on it, just the way it is. So what's pending, what's cleared, and what the balances are. How much money have I got sitting there? How much money can I take? Hey, I got payroll coming up. I'd like to take some money out of escrow. Can I do that? And that's what an electronic-based escrow system will do. You're going to be able to log on. It's going to take care of you, and you're going to know what's there. It's very, very key. And you've got a number of banks out there that are participating in this space and doing it. Then you've got compliance. Welcome to the SEC. Welcome to a regulated world. You're going out with an SEC filed offering. Compliance, even when you're not with a 506D, is key. Compliance with a Reg A is even more important. You're going to have bad actor checks done on the company, the CEO, all the officers, all the directors, and all of your owners of 20% or more of beneficial interest in the company, which means if somebody invested in your company through an SPV, you got to reach through the SPV and do the bad actor checks on them. What that means is if anybody has been convicted of securities fraud or postal fraud or things like that in the past, then you can't raise capital. We had one issuer who had somebody on the board of directors that was deemed a bad actor under SEC rules. That stopped the company from raising capital. They had to terminate the director relationship and his investment position. They had to buy him out from the company because otherwise the company is not allowed to raise cash under any securities laws in this country. KYC means know your customer, know your investor. You need to know who they are, where they live, what their basic information is. And suitability is what applies if a broker-dealer is selling and smiling and dialing for your offering. The non-accredited rules have to be enforced. If you have a non-accredited investor that invests more than 10% of their income or net worth into your offering, you have a problem. You have a potential problem, both from a regulatory perspective and from a tort perspective. Either way, it's going to cost you a lot more money than that investor invested. It's not worth it. You have to be very aware of that. Anti-money laundering, really, really key issue. Billions of dollars in fines are levied for anti-money laundering violations. That means checking treasury lists, OFAC, FinCEN. It means checking the IRS deceased persons. It means checking FBI terrorist watch list. All these different reports have to be checked to make sure that an investor isn't going to cause you any heartburn in your offering. You've got to be able to do offering management. If you're a broker-dealer, this is an example of our broker-dealer dashboard that for people using Fund America technology, we have dozens of broker-dealers that are our customers, and they see all of their transactions, all of their syndicate member transactions, so that their compliance team can review it, vet it, and either accept or reject an offering. You have records retention. Look, you don't want to have people faxing you subscription agreements and investor documents. You want this all online. You want it easy. You want one place to go. This is technology-driven finance. There's no reason to do anything offline. So all of your records, they need to be retained. They need to be accessible indefinitely. You know, SEC rules require 3 years, 5 years, different terms, but the reality is, who cares? You put it on a drive, put it in a cloud, and available forever. And then the other is syndication management. Like I said, no one broker-dealer, no one platform is going to sell your deal, and they should be They should be the first ones to tell you that. They're going to need to bring in a village to help get your deal sold. You're going to have to market it yourself, probably drive investors to your website. You should be using platforms like Start Engine. You get broker-dealers that will syndicate to other selling broker-dealers. People bring it in. Managing that electronically is really, really important. But this all comes into the guise of compliance. And then for closings, great, success. Like I said, closings, not closing, because you'll close escrow a lot. As soon as you meet your minimum, you're going to take funds from escrow. You're going to pay your selling agents, your platform, your broker-dealers, whoever. You're going to send investor confirms to the people who you just closed and took that money from out of escrow. In escrow, it's the investor's money. Once you take it from escrow, it's your money. Well, then those investors own securities. You've got to get the data to the transfer agent, and VStock is going to be talking about that later. So you want to keep selling until you hit the max. Once you hit the max, once you've closed your offering, you're done. You're no longer raising money anymore. Then you can go get DTC qualification so that you get everything assigned, you're ready. Your broker-dealer has to file a Form 211 with FINRA, and that is how they get your symbol that will be on OTC. The broker-dealer makes your first quote on OTC. So an example with Elio, Hambrick was the broker-dealer on that did that. They filed the 211, they got the Elio symbol, and they worked with Elio to get the DTC qualification, file the form, and then get OTC market qualified so that they could do that. You're going to need an OTC member broker-dealer to do that for you. That's just a requirement to get open. And then if you had any investors that wanted securities held in their name directly, but now they want to move it into their brokerage firm, or they told you that at the beginning, then you do what's called a DWAC letter, where they are instructing their broker-dealer, so they instruct Fidelity or Schwab or whatever to then tell the transfer agent it's no longer in John Smith's name directly, it's now going to be in E-Trade's street name. So that's the common way to do it. But remember, the key thing about your Reg A offering is this right here, plural. You're gonna close escrow a lot. Every time you log on as a CEO or the CFO of your firm and you see how much money is sitting in escrow, you're gonna push a button that says, disperse that money to me, please wire it. So it's gonna happen quite a bit. So let's put it all together. So an investor sees your offering online. They click, they want to invest now. They put their investing information, they go through the process, they sign the agreement, then the system has to say, is the investor accredited, yes or no? Is it required to be confirmed? If it's a 506C offering, it is. In a Reg A, it's not. AML checks are done. Do they clear AML? And the answer can be yes or no. Sometimes, especially domestic, we've had many instances where people have been caught trying to invest in a deal using a deceased person's tax ID. We've also seen, we do a lot of international business. We've caught instances, we had one guy investing in South Africa, and when we traced the funds back, they were actually coming from Iran. That's illegal. So you have to, do they clear AML? No, stop the deal. Yes, it goes on. The broker-dealer, if there's a broker-dealer involved helping sell this deal, their compliance people have to review everything. Then, have the investor funds been received? No, it stays on a cash expected blotter. Yes, it gets moved into bank escrow. Does the issuer want to close? Are you clicking the button saying, hey, disperse, I want that money that's sitting in escrow? If you say yes, then has the offering met the minimum and are the funds cleared? If it has, then escrow is informed, the bank escrow is informed, and the funds are released to you. You get the money. At the end of the very end of the offering, everything is stored permanently, so it's accessible, and the data is provided to the SEC registered transfer agent, so that then you can go up, get your DTC qualification, get your 211 filed, and start trading on OTC. So Reg A, internet-based, crowd direct offerings, they're not the future, it's the now. It's time to log on, and that's what we, and I'm using a royal we as the industry, do. Fund America, we provide all the plumbing. We don't work with investors. We typically don't work with issuers directly. Our customers are the broker-dealers, the funding portals, the platforms, the advisors, the lawyers, and other people who are in that space. We just make it possible for investors to move money. We provide the transaction engine in different forms. So whether you go onto Hambricht and you're investing in a deal there and you click a button that says invest now and a little box pops up, or you go to Start Engine or Bankroll or these other sites and you see the forms that they've beautifully built, that all builds into our technology. So at the end of the day, people are typically using us. But the moral of this story is, it is the internet, it's exciting. You can now use general solicitation, which meaning advertising, which you couldn't do, it was illegal. But you have to be aware there are certain structural things that are required. You've got to have the technology, meaning the transaction engine, so somebody can actually invest online, which has to be in a single event. You've got to have escrow. You've got to have the compliance tools. This is all absolutely mandatory for conducting your offering and finding success. So, any questions? Mentally.
Can this platform be used for convertible debt offering?
Sure.
Okay.
Oh yeah.
So it just basically cuts out all many of the steps that don't apply.
What a lot of people, it's like, there are people that say for crowdfunding, they say, oh, it's equity crowdfunding. Drives me crazy. It's securities crowdfunding, equity or debt. And in many cases, for the smallest deals, let's pick on Title III for a minute. I'm an accredited investor, I'm an angel investor. I invest in deals all the time. I never buy equity in a small company. To me, that's idiotic. So these little companies that are offering stock in their startups, that's insane. It's insane to think that even an educated investor is going to buy that. It's going to be debt. Well, let's jump up to Reg A. It's a much more professional deal. A lot of it, everything we've seen so far, most everything we've seen so far is equity, it's stocks, but some of these things are also turning into debt. They're either turning into preferred or they're turning into, they're offering debt instruments of various kinds. But you can offer debt, aka bonds, via Reg A, just like you can offer stock. Absolutely. Yeah.
So how does it work? We need to buy the software, or we need to hire you guys to promote this?
No. It's all baked in. You're probably not going to talk to Fund America, quite honestly. You're going to speak with like Start Engine or Hambright or Network One or some other broker dealer or advisor, Seed Invest or Bankroll or these other platforms. I mean, Start Engine is the gold standard, but they're going to take care of that. They've already written into our technology. Writing into our technology is generally not that easy. We have some plug and play elements, but it's an onboarding process. What's important to know is that as issuers, when you're going out looking at who are going to be your service providers on the front end and how you're going to conduct it, how you're going to actually enable people to buy the securities, you need to have the technology that's going to work and is going to be frictionless and, like I said, a single event and not break up the process. Absolutely foundational for your success, but it won't be us doing that. It's going to be somebody else that's working with you directly. We're just a little farther down in the stack. Not that we don't like you, we want you to be successful.
So how do you guys get paid? You get paid?
We get transaction fees. We get license fees and we get transaction fees. Everybody, that's the one thing. It costs money to raise money. You're going to pay your lawyer. You're going to pay your accountant. You're going to pay your marketing firm. You're going to pay your broker dealer. You're going to pay your banker. All these people have to get paid. And everybody's enthusiastic about your business, but nobody's willing to work for free. That's not how it works. You're betting on your success. Don't expect other people to bet on your success, no matter how positive they are about you.
So in this example, if the Start Engine take certain percentage, will that your expenses come through their commission or percentage of?
Different providers work differently. Sometimes some broker dealers bundle our fees into their fees. Others just have the issuer sign a technology agreement with Fund America and they pay us the fees directly. There are some nuances for that, especially where it's a broker dealer led offering. They have to file what's called a Form 5110 with FINRA. Broker dealers don't want our fees to be in that form because then it limits how much the broker dealer can earn. And the way FINRA calculates it can be a little ridiculous. So often the issuer will pay our fees directly, just like they'll pay escrow fees directly, but it doesn't mean you're necessarily talking directly to the escrow bank. You're probably not talking directly to us. You're just paying the fees that go for the service.
Just a quick question on AML. AML could destroy something, but if you have an AML situation you identify an AML situation, how easy is it to unwind that to allow the deal to go forward? Is it a complex process or?
No, it's very, very easy. There are a number of situations. Remember, when the funds are sitting in escrow, they're still the property of the investor. They're not the property of the issuer.
Until the closing.
Until the close. So whatever close that is along the cycle. But as long as they're the investor's funds, you have not sold them the securities yet. So you have a contractual, you have a unidirectional, they wanted to sign a contract to buy your securities, but as the issuer, you haven't countersigned that contract to sell them the securities. So you wait for the funds to clear, because the funds might not clear. You wait for AML to clear, because they might come back that it's a fraudulent tax ID number. If that's the case, then what you'll do, either you or your advisors will do, is press a button that says reject this investor and refund them. And that will automatically happen from escrow. It causes no pain at all for you. And it could be too that somebody signed up to buy, maybe your competitor wanted to buy your securities and you didn't want them to. You go, yeah, I'm gonna reject that person. So you have the option to do that. So. Yeah.
So do you have competitors?
Not really. We have some people who think there are competitors, but we view them as potential customers. It's actually kind of funny.
Are you public yourself?
Huh?
Are you public yourself?
No. We're venture funded ourselves. We're small. Everybody in this space is small, and it's the first inning. And frankly, we're barely to the first base. We've got one company trading on OTC, right? One Reg A, Elio. That's it. We have 8 other Reg A's in our system that are successful, that are taking money and getting money out of escrow, but they haven't closed fully yet. They're still selling securities. Some of them are going to be doing it for a very long time.
But how many companies do you have that are not going the Reg A route?
Oh, we have a lot of 506B and 506C. That's the bulk of our business. We have billions of dollars in offerings in our system that are not Reg A offerings. Our total book of Reg A offerings are probably $500 million in that range. So Reg A is going to get bigger, but it's going to get bigger because the more attorneys are being educated about it, and they're recommending it to their customers. More broker dealers are getting involved and saying, "Oh, geez, here's a classic example. We had a hotel group in Ohio. They're building a Marriott hotel on the Ohio State University campus. Their broker dealer is Houlihan, which is a famous broker dealer. And they told Houlihan that they wanted to do this hotel on the internet. They wanted to put it on the internet and get their investors to invest that way. The broker dealer freaked out. Like, oh my God, how do we do this from a compliance perspective? How do we do this from a mechanical perspective and allow people to go to a website and invest? And so a lawyer referred them to us, and we went through the process, and the CEO said, "Thank God you exist." But it makes the process easier. But the point is, more and more broker dealers are getting involved in this space because the issuers are saying we want to use the internet to raise capital. Rarely are the broker dealers going, "Ooh, yeah, let's use the internet," because their compliance teams are freaked out about it. I met with 5 different brokers yesterday in the city, all trying to come up in this to speed on this space, including one that's very large. So they're not all small. Any other questions about mechanics, regulatory? Great. This is easy. Thanks, everybody.
Scott, we have lunch.
I will end early so we can have lunch.
We have lunch being served up there, so everybody gets a chance to network a little bit, and then Richard Swore is going to give a market perspective discussion. Probably, before we end, we're going to be open until 2 o'clock. We're going to give up on 2 o'clock. Okay.